goal to get your first apartment building this year? And do you feel like if you just understood all the steps from A to Z, you'd be more confident about moving forward towards your goal? Well, welcome to our Apartment Investing Masterclass. Today, we are here to teach you the 3 things that you must know to get your first apartment deal without syndication, so that you'll finally be able to get into action and get started with apartment investing. And our goal today is to make sure that you leave ready to make offers and raise capital so that you can make getting into your first apartment deal a reality. And just imagine like going from dazed and confused about where to even start to owning your first apartment building. So we're Jen and Stacy Conkey, and I'm the Stacy of Jen and Stacy. We started back in 2003, almost 2 decades ago. And over that time, we've built a multi-million-dollar portfolio of multifamily real estate. We've invested in 14 different markets, 100% remotely. And we've done pretty much every kind of real estate deal over the years, and we've been coaching new investors for more than 10 years. We help people lock down, close, and manage their first few deals. So for us, we got started back in 2003 living in California. And there's 3 problems with that. 1, prices are super high, market is extremely competitive, and the landlord laws are so unfriendly to investors. So we felt completely blocked. Where do we even start? Where would we even find apartment deals? And even when we find them, how do we know how much to offer? Like, talk about analysis paralysis. On top of that, we both had full-time jobs in corporate America, but we didn't really know how to fit all of this in. And it just left us feeling very unsure about whether it was even possible for us. But we could see other people doing it. But then, of course, we didn't have the kind of money that you need to take down an apartment building. So how is that going to happen? So it just felt like there was no way we could ever achieve our dream of owning an apartment building and ever escaping our 9-to-5 jobs. Have you ever felt that way? Like, how is this ever going to happen for me? And then we ended up enrolling in a program and they said, oh, invest within 50 miles of your house. Well, they clearly didn't live in California. So we were just getting more and more frustrated, more information that we couldn't put to work. And then finally, we met someone who was investing out of state, and we started asking lots of questions. And it was really, that was the turning point for us. Everything changed, and we just ditched that 50-mile BS, and we learned how to analyze a market anywhere in the US from our laptop. And then we learned how to build relationships with local commercial brokers so that we could find both listed and, more importantly, unlisted properties that we could make offers on. We went through all the numbers and how to analyze them. And frankly, I remember making our first offer and I was thinking, I'm going to have a heart attack. I was so scared. But every time I did another offer and another, my fear would just get smaller and smaller and smaller. And eventually, analyzing deals and making offers, it was easy. I needed somebody to show me what I didn't know. And then it was up to me. I had to do the hard work of taking the reps and facing my fears all the time. So my point of all that is just to say, I know where you are and I know what you're going through. The journey to get where we are started off as very scary and very uncomfortable. But that was just at the beginning. Now it's infinitely easier. And, we're just regular people like you. We did it and you can do it. And now at this point, Jen and I have built our business to the point where we have more money coming in than we need. And the nice thing about that is now we have options. We can go spend 3 weeks in Cancun with our kids, with our nanny, and do all the fun things we couldn't afford in the past, where we can put all our kids in whatever sport that they want and let them get whatever level of coaching that they want. And that's really the point of this whole masterclass and why we put it together for you. Just to show you everything that you need to know so that you can get your first apartment building and start building a passive cash flow that you deserve, to give you the freedom to choose what you do with your time. And it's just following a system. I mean, can you follow a recipe? Are you coachable? Are you just a regular, normal human being? If the answer is yes, perfect. You're in the right place. So we want to share with you the secrets that we've learned over the years to help you ditch those old, outdated teachings and really get you to start investing. Our passion and our mission is really to help our students get out of inaction to actually closing on their first apartment building. like our student Steve. So Steve went from 0 to 50 doors in 14 months using our proven methods. And we're going to talk more about Steve's deals a little bit later in this training so that you can see what his actual progression was and see that it is absolutely possible for you too. So I want you to close your eyes for a minute. And I want you to take a deep breath and just imagine what it will feel like when you hit your first 50 door mark. Like, what do you see? What do you smell? And how do you feel? And for those of you who are maybe freaking out a little bit about the thought of taking down 50 doors in a year, just take a deep breath and remember, Steve is just a regular guy that started exactly where you are. And he just took one step at a time. In fact, his first deal was just a duplex, just 2 little units. And that just started a whole snowball effect. Anyway, just know you're in the right place if you maybe don't know how to select a market, find deals, or feel confident in analyzing them. Or maybe you're scared to make an offer and you just can't afford to make costly mistakes. Or maybe you just don't know how to raise funds for your deals. And maybe you just want an experienced mentor to hold your hand through your first deal or two. So are you in the right place? And look, if you've been trying to figure all this out, you just haven't been able to, it's not your fault. The majority of the teachings out there just simply don't prepare us to actually close on deals and build wealth. And that is what is about to change for you today. So let's get started. So today you're going to leave with a clearer understanding of what are the exact steps that you need to take to start getting into action to close on your first multifamily apartment building. We're going to show you how to select the right market so you can know you're in a great cash flow market and concentrate your efforts in one hot area versus making offers on a bunch of random deals. And we're going to show you how to find deals in those markets that you have a steady flow of deals to analyze versus scrubbing the internet for hours and hours, just getting frustrated by how long it takes. We're going to show you how to analyze deals so that you can feel clear knowing what is the right offer. And what's the right offer depending on what strategy works best for you. And we're going to teach you how to make risk-free offers so that you can have complete confidence that your earnest money deposit is protected. And we're also going to show you how to raise funds for your deals without syndication so that you can easily fund and close your deals instead of spinning your wheels trying to figure out all the ins and outs of syndication attorneys and SEC rules. Yeah, there is a lot we're going to teach you today. So look, we want to make sure you get absolutely everything possible out of today's class. So if you don't have it yet, go grab a pen or pencil, paper, and a calculator. All right, and then make sure that you remove any distractions and be fully present. All right, you guys ready to rock? All right, let's do this. So here's the deal. In our experience, 80% of the challenges with getting started are related to 3 main areas. So write these down. Number 1, selecting a market and finding deals. Number 2, analyzing deals and making offers. All right, number 3 is raising funds. So make sure you write them down because we're going to keep pointing back to that so you know exactly what you learned and how to apply it today. So we're going to solve those challenges for you in today's masterclass. But what about that other 20%? I mean, obviously, we can't teach you in 1 hour what's taken us 2 decades to master. But with what you learn today, you'll be able to roll up your sleeves and get started. And it can make a huge impact on launching your business. So we're going to share a lot of information with you today, as much information as possible in the time that we have. But don't worry, we've got you covered. I promise that I'll take a few minutes at the end to let you know what the next steps are and how you could get additional support if that's something that you feel that you want. All right, so how many of you feel like if you just felt confident in selecting a market and you knew how to find apartment deals in that market, you'd be a huge step further ahead than you are right now? Well, yeah, right? That's exactly where Temi was when he came to us. So Temi had already purchased a couple of duplex in his home market, but he really wanted to expand into apartments. But of course, that's an entirely different game, right? Like, he knew how to buy a duplex at home, but he really wanted to start scaling up his efforts. And he recognized that there's efficiency and economies of scale when you're buying more than 2 units at a time. And he just really wanted to start ramping up his cash flow. but he didn't know whether he was in the right market for buying apartments. And even if he was, his realtor didn't know where to find apartments. They were residential, right? He's a residential realtor. So he didn't know about how to even find them. And then what if he made a major investment, but he made it in the wrong place? And choosing the right market is a critical first step in investing. So between those two gaps, Temmie felt really stuck and he didn't feel like he could go any further. Anyway, that's why he reached out to us. He wanted to get some mentorship and learn how to analyze a market, how to start getting deals coming in. And he didn't want to go be making big mistakes and lose a bunch of money on his first couple deals. So he wanted us to just hold his hand through his first deals. Anyway, so the very first thing that we had to help him with before we could even take the next step was how to analyze different markets to pick one that made sense for him. Well, even before choosing a market, you have to know what your long-term strategy is. So are you trying to buy something that's already performing and already cash flowing? If so, we call that a stabilized property. Or maybe are you willing to put in more time and effort into the property to create equity and cash flow? That's what we refer to as a value add project. So that was really the first thing that he had to think about. And one of his big goals was to replace his income from his job as a mechanical engineer. And he doesn't hate his job, but there are just other things that he'd rather be doing, like anything outdoors or doing CrossFit or participating in Spartan races and, of course, buying more real estate, right? So in that case, Temmie had to find a market that would work for cash flow. So the very first thing we had to teach him about was something called cap rates. So what are cap rates? Cap rates show the potential rate of return on an investment. So when you're buying a stabilized building, you're going to tend to want a higher cap rate. A higher cap rate equals higher cash flow. And oddly enough, it's actually the exact opposite when you're doing a value add project. So for value add projects, we want to find a market where the market cap rates are lower because it actually makes your deal more profitable. I mean, frankly, I could spend an hour just breaking down that one concept alone, but we'll save that for another day. In Temmie's case, he wanted a stabilized cash flowing building. So stabilized equals higher cap rate. So Temmie needed to find a market with a solid higher cap rate. Does that make sense? Like, you have to know what you're trying to accomplish. Anyway, that will help you pick the right strategy. Then that will help you know what markets you want to invest in. So anyway, immediate cash flow, you're going with stabilized and a higher market cap rate. For equity and cash flow, but with more work and you're okay waiting a bit for the profit, then you're going to go with value add and a lower cap rate market. So I have a question for you. When you think about your long-term goals for real estate and what makes sense to start with, which strategy do you think that you would start with? So on your paper, I want you to write down either stabilized or value add. So are you looking for immediate cash flow, or are you willing to wait a little bit and go for equity and cash flow? Okay, so if you're all about immediate cash flow, write stabilized on your paper. Big letters, circle it, underline it. All right, and if you're value add, write that down, circle it, underline it. So it doesn't mean that you can't change or adjust as time goes on, but my whole point of making you write it down, circle it, underlining it is because floating around without knowing what you're trying to accomplish makes it virtually impossible to ever gain traction. So now that you've narrowed down your focus for which type of projects it makes the most sense to start on first, now you'll be able to take action. So great job on making that decision. Now, that's not the only thing you have to pay attention to when choosing a market. That one is super important, but there's two other things that I want you to research as well. All right, so remember, number one was matching your market cap rate to your goals. Number two, you want to make sure there's a stable or growing population of at least 100,000 residents. So I want you to think about, like, why do we want a stable or growing population? What would it mean for you if the population was declining, so it was going down month after month, year after year? Just think about the law of supply and demand. If the supply of units stays the same, but the demand for those units, the number of tenants, is decreasing every year, I mean, what does that mean for your vacancy expense? So the risk of investing in a market where the population is going down is that your units stay empty longer. Well, that's one of the biggest expenses as landlords that you have to deal with. So you want to be in an area that is at least stable, if not growing. And we generally always start with major metropolitan areas, at least 100,000 people. And then from there, when you start there and do the research, you're fine to then go out to the suburbs to look for your deals. All right. And the way that you research population and population growth is actually really simple. You're just going to go to Google and you're going to type in population in and then whatever city. All right. And then you'll see what the current population is there, plus how it's been trending over the past 10 to 20 years. All right. So number one was matching up your market cap rates to your strategy and your goals. Number two was population and population growth. Number three, you want to see positive job growth trends in the area, meaning you don't want to do research just to find out the unemployment is going up, right? And this information is not difficult to find. There's a whole website from the Bureau of Labor and Statistics, and that's BLS.gov. So www.bls.gov, where you can literally see years and years of employment trends month over month, so that you can make sure that you're not about to put a bunch of time and effort into an area where the unemployment rate is just steadily climbing. All right, so let's do a quick recap so that you can make sure your notes are crystal clear on what you're looking for. All right, so number one, your strategy. Are you looking for a higher cap rate or a lower cap rate? So if you wrote stabilized, you're going for the higher cap rate. If you wrote value add, you're looking for a lower cap rate. All right, number two was population. We want to see population steady or growing. And number three was job growth. Same thing. We want to see that it's steady or growing. And, obviously when you're getting into apartments, there's going to be a lot of other factors that we look at when we're evaluating markets, but just looking at those three are going to massively narrow the field and get you starting to take action and looking at potential deals. Anyway, so getting back to Temi went to work researching a bunch of markets, and he found a couple that would work, and he ended up settling on one. And then he went deep into that market to really understand everything he could about it, like what numbers were typical there. And just imagine, like, how much more confident would you feel if you knew what the average price per door was, what the average property management costs, property taxes, insurance, maintenance, etc. Even without having financials on a property, you could at least run a quick analysis and see whether it was worth spending any more time on. In 10 minutes, you'll know whether the purchase price was worth pursuing a conversation with the seller, or whether they were pretty much out of their mind and you shouldn't waste your time. If you had that level of knowledge about a property, do you think you'd be more confident in making offers on properties once you started having properties come to you? Well, yeah, of course you would. And let's just be real. Numbers are completely different market to market. Imagine the difference in the cost per unit between an apartment unit in San Diego versus an apartment unit in Kansas City. That is why choosing, analyzing, and really knowing your market is going to be so important. All right, so anyway, once Temi had his market chosen, he had to start getting deals coming in. And it's funny because one of the things that really plagues investors who are new to apartment investing is understanding where to get these deals. And I'm not talking about junky deals. I mean, good deals. Like, where is the secret vault of good deals? Have you ever wondered that same thing? I mean, frankly, all you ever hear about out there, it's so competitive. There's no good deals. Really? If that's true, then how are our students like Temi, Joni, Battelle, Steve, Lupe, Barton, Gigi, Brian, Felicia, Debbie, Lonnie, Amalia, how are they all finding these impossible deals? It's actually not as hard as you might think. Well, Stacy, if that's true, then why haven't I found a good deal yet? Well, for starters, you probably haven't looked. But here's the reality. Like, it's not your fault that you haven't found a good deal. Like, where have you been looking? MLS, LoopNet, Crexy, listening to other investors telling you there's no good deals? Look, I'm about to share with you the secret sauce. Are you ready? And do you have a pen? You better get it warmed up. It really and truly comes down to one word: relationships. And what I mean by that is it's the relationships that you build with commercial realtors and brokers. It's no big mystery that it's rare to ever find a listed apartment building that's actually a good deal as listed. So why am I saying commercial realtors and brokers? Like, aren't they the ones listing the properties? Well, yeah. However, they are also dealing with off-market properties. And in most major cities, they're dealing with way more off-market properties than listed properties. Well, why is that? I'm going to teach you something about commercial brokers that is uniquely different compared to residential. So in commercial real estate, there's often a small number of commercial brokers in any given market that dominate that market, and they get the majority of the listings. Well, guess what they're motivated by? Just like most people, money, right? And what happens if they list the property? They list the property in a public place, everybody can see it. Some other broker is going to see that deal and they're going to have a buyer. And so that other broker is going to bring in a buyer. And now this broker is going to have to end up splitting the commission. But if they keep it off market and they find the buyer themselves, they get all of the commission. Because of that, off-market deals end up accounting for the majority of the deals that get done out there, and definitely the majority of the deals that our students have taken down. But how did they find those off-market deals? By building relationships with the multiple brokers in their chosen market. Oftentimes starting by finding a property that's actually listed and then talking to that broker and then getting into a deal that was a pocket listing or unlisted. I know it seems so simple, like it can't really be that simple. I assure you it is. And make no mistake, I'm not saying it's easy. In my opinion, nothing in real estate is easy, but it's also not super complicated. So start finding and building relationships with commercial brokers, and you're going to be on your way to getting deals flowing in. Temi did exactly what we taught him to do, and what I'm teaching you to do. He started reaching out and building relationships with commercial brokers in his area, in his chosen market area, not where he lived. And he started getting deals coming in, analyzing them, making offers, which we're going to talk about next. And bam, one day it happened. The sky opened up, the angels blew their trumpets, and Temi got a call from his realtor. Your offer was accepted. So Temi ended up going through due diligence, funding, and finally closing on his first apartment building. And it was this gorgeous brick 6-unit stabilized property that was cash flowing the moment he closed. And trust me, it was not an easy process. He'll tell you that, but he did it. And in doing it, it helped him build massive confidence in his ability to do it again. And you know what? Within 2 weeks, he was under contract on his next deal, another 6-unit, just a few blocks from the first. So now Temi owns his original 3 duplexes plus 2 6-unit apartment buildings. It's so exciting when you finally get there. All right, let's do a quick recap. So when it comes to market research, you're focusing on 3 things initially, right? Your strategy and cap rates, population growth, and job growth. Make sure you have those in your notes. And when it comes to finding deals, you're going to start finding and building relationships with commercial brokers in your chosen market, and you are going to be well on your way to getting deal flow coming in. Whew. All right. Are you guys ready for teaching point number 2? All right, let's do it. All right. So teaching point number 2 is we're going to talk about analyzing deals and making offers. So the next thing we're going to be talking about is really one that tends to put a lot of new investors in a state of complete analysis paralysis. I mean, how many of you have ever seen a property and thought, man, I really want that, but I have no idea how to determine whether it's a good deal? Like, have you ever wanted to make an offer, but you get stuck in total paralysis when it comes to actually crunching the numbers and making the offer? I can 100% remember feeling that way. I can remember sitting at my computer screen just staring at it. My mind was just swirling. I got myself so worked up because my fear was like level red. But why? I don't actually know why, but I do know that the fear was real and it was paralyzing to me. I think I spent the first 6 months of my investing journey just in a state of complete nausea all the time. I couldn't eat. I couldn't sleep. I was a hot mess. My background is in accounting. So I'm a CPA, by education and trade. And during the years, I've learned that there's just certain personality types that tend to struggle a lot more during these early stages. And it's the personality type that tends to lead people to like accounting type jobs and engineering type jobs. Like we just want to analyze everything to death before we make a move. Have you ever felt that way? If so, it's not your fault. It's just how some of us are wired. And some of you don't have that issue at all. You're perfectly fine just jumping right in. Like shoot first, ask questions later. I'm thinking of two people in our mastermind right now. They're complete polar opposites. So there's Cassandra, who's me, and then Lonnie, who's Jen. So Cassandra's been in our program for a while, and I've had a chance to get to know her. Super smart, super analytical, takes her time. Well, she recently made an offer on an 8 unit, and it took her a while to feel comfortable enough to do it. And I'm not saying it wasn't scary, but it was a reasonable level of scary, and she did it. Lonnie had just started our program. He's a wild action taker, just like Jen. No fear. He just submitted an offer on a 10-unit apartment building, and then it got accepted. It's like all of us have such different personality types, different backgrounds, different fears. But the one thing that's common is when you feel like you know what you're doing, it's 100% easier to jump into action and start making offers. So let's help you get more aligned with knowing what you're doing. And that starts with understanding how we analyze deals. So let's dive into it. Are you ready? All right. So what do you think the bottom line is? Like, what is that one number that matters above all else? Is it net operating income? Cash flow? Is it cap rate? Debt service coverage ratio? Cash on cash return? Is your brain spinning right now? I get it. Like it's exactly how our student Joni felt when she started working with us. And it's funny because she moved pretty easily through the first couple of steps of selecting a market and finding deals. She's a natural people person. Like she worked in nursing for years. So talking to people, totally easy for her. But the idea of crunching numbers and more numbers was completely unnerving and daunting. Like she'd look at that apartment calculator and suddenly the dishes need to be done right now. Have you ever felt like that before? So we just had to help Joni take one step at a time, help her build up her confidence. And of course, with confidence, you get competence. So we just started with the basics. All right, so revenues, which would be rents, minus expenses equals net operating income. All right, well, that's not so hard, right? Now, in apartment investing, we look at everything on an annual basis. So, and this is the time to get out your calculator. If my annual rents are $100,000 and my expenses are $45,000, how much is my net operating income? So go ahead and get out your calculators and do the actual math. It will help it stick better. So if my annual rents are $100,000, and my expenses are $45,000. What is my net operating income? That's right. The net operating income is $55,000. All right. So far, so good. Like it's not too crazy, right? So for many investors, the bottom line is actually cash flow. Well, what's the difference between cash flow and net operating income? What we have to pay the bank every month for giving us the money to pay for the property. So you would call that mortgage payment on your personal residence. Do you know what we call it in apartment investing world? Well, the correct answer is debt service. Okay, so your cash flow equals your net operating income minus your debt service. So write that down in your notes. Cash flow equals net operating income minus debt service. Okay, so we already established that the net operating income, which is also referred to as NOI, if you don't want to write out the long version, we already established that that's $55,000, right? 100,000 minus 45,000. So if our NOI is 55,000 and let's say our debt service was 25,000, what would your cash flow be? All right, what did you get? So if cash flow equals net operating income of 55,000 minus debt service of 25,000, your cash flow would be $30,000. Did you get that same answer? Awesome. Okay, so we ended up taking Joni through that exact same process. We just broke it down for her step by step, holding her hands until things started to stick. And she had lots of conversations with her one-on-one coach. And slowly but surely, she started feeling like, yes, I can do this. I'm getting this. Anyway, so Joni ended up finding 2 buildings in New Orleans, and she wanted to make offers on both of them. And we're going to talk about what that process looked like. But first, I'm excited to report that Joni ended up getting both of them under contract, and both of them ended up being great deals. So she bought both of them. So Joni ended up adding 6-unit apartment building and a 9-unit apartment building to her portfolio within a month of each other. Like, talk about rock star status. So let's back up and go back to the point where she was just considering submitting an offer. Like, what does that process look like? And it's interesting because making offers on apartments is a little bit different than 1 to 4 family. And it's actually less scary. Say, what? How can that be true? Well, have you ever heard of an LOI? Do you know what LOI stands for? All right, if not, write this in your notes. It stands for letter of intent. So LOI is letter of intent. What the heck is that? So a letter of intent is typically a short document, maybe 1 to 2 pages. That's the equivalent of you writing a little greeting card, expressing interest in someone's building. I mean, it doesn't look like a greeting card, but it has the same level of obligation as one. A letter of intent is non-binding. So do you know what that means? So let me compare it to what you would see with 1 to 4 family properties. With those, we make an offer on a purchase and sale agreement, and we sign it. We include all the terms of our offer. If the seller likes it, they sign it too. And now we have a legally binding agreement. I agree to buy it, they agree to sell it. And of course, we have an inspection period so that we can get out if things don't look good once we get into due diligence. But it can still feel a little scary when you're new. Like, oh my gosh, what if they accept? Well, with a letter of intent, you fill it out. If the seller likes the offer, they sign it. Does that mean you're obligated to buy the property? Nope. It just means that you and the seller have come to a preliminary understanding that you're both interested in doing this deal at X price. In practice, it's actually more common to have the LOI go back and forth several times before both parties agree. So let me give you a real life example. So we have a student named Batel, and Batel had a thriving Airbnb business with a partner in San Diego when COVID hit. And it pretty much put an end to everything because everything in San Diego was shut down and she needed to pivot. So she decided to focus on multifamily, but something that she would have the option of turning back into an Airbnb once the economy was back. Well, she ended up finding a 9-unit motel that had some long-term tenants in it. So she submitted her LOI. The asking price was $1,750,000. But man, that place needed a lot of work, like $250,000 in order to bring it up to Airbnb status. Like every unit needed to be completely upgraded. And there was some major deferred maintenance on the property, like the pool. It needed a new roof. There were plumbing and electrical issues. Anyway, her initial offer was $1,500,000. And the seller got that on the LOI and was just like, unacceptable. But instead of it being this big 20-page document going back and forth, he just crossed out her price and he wrote in $1,725,000. He sent it to Patel. Patel crossed out his number and wrote $1,550,000. This literally went back and forth for 2 weeks. Part of that was because there's actually even more interesting things about this deal. Like the seller was offering seller financing. So the other thing they were going back and forth about was the down payment. And Patel's argument was it needs so much work. He wanted $700,000 down. And she was like, no way, not even close. So she offered $200,000 down. You know, basically saying, look, it needs $250,000 of repairs. I'm going to have to come out of pocket. So they got to go back and forth without dealing with 20-page contracts and multiple page addendums. And it was just basic and easy. And at that time, I was Patel's one-on-one coach. And so we were spending a lot of time sending Marco Polo videos back and forth as she'd update me. And I would then advise her. And I laugh now because I look back and like the seller was just trying to wear her down and it was working. But I was not going to let her settle. She just was like, I'm just tired. I just want to do this deal. And frankly, even at full asking price, because of what she was going to do with it, this deal was a monster. Like there was so much money to be made on it. But as her coach, I had to point out, like, Battelle, there's so much money to be made on it, but we are in the middle of COVID. So we don't know how long it's going to be before the economy is back and there's tourism and you could operate it at its highest and best value as an Airbnb. So she got the seller down to $1,650,000. So she got him down by $100,000 on the purchase price and down to $350,000 as down payment. So half. So she was doing a good job. And I can remember standing in my kitchen, watching her video, just saying, like, I'm just tired. I don't want to do this anymore. I don't want to lose the deal. Like, she just wanted to accept his offer, his terms. But the $350,000 was posing a problem. And like, she could technically go up to that, but it would make things very tight. And when you're doing a $250,000 rehab, like, you can't be tight on funds. It's too risky. And she just wanted to say, fine, let's just go. And as her coach, I couldn't. I just stood in my kitchen, kids running all over the place like a bunch of maniacs. And I looked her dead in the eye. I mean, sort of, because I was just actually looking at my phone camera. And I said, listen, Battelle, you're not done negotiating. And she kind of pleaded with me, please, I just want to be done. Have you ever felt that way before? You're just something that's hard and it's being drawn out and you just want to be done already. I mean, I get it. Me too. And it's hard because at this point, Battelle's become like my friend. And I don't want to be mean or harsh to my friend. But sometimes as a coach, you have to be who your student needs and not who they want. So I said, Battelle, no. What if one more round of negotiations saves you $25,000 or even $10,000? Are you seriously trying to tell me right now that for 15 minutes of work, basically sending an email to your realtor, that it's not worth going for that? She was like, oh, okay, that's true. You're right. So she ended up getting $25,000 more off the price and $50,000 more off the down payment. So like, just one more round of negotiations made a huge difference. And Battelle grew so much during that transaction. And that's truly one of the things that happens when you start growing in this business. You become a different person, a smarter, more savvy, more confident person. Not person, CEO. Anyway, once they agreed on those things, it was literally 17 days of back and forth just to get there. Then it was time to take those terms and put it into an actual official purchase and sale agreement with an addendum outlining all the things that she'd need from the seller so she can do full due diligence. That took another 2 weeks of negotiations. But while they were negotiating all that fine print, she was up there. She's starting to do the due diligence like right now. So timing wise, just to have an idea of kind of what the time frame was, the very first letter of intent that she submitted was in late June. All right, late June 2020. She closed on her motel in mid-September 2020. Oh, and I forgot to mention, when she got her inspection, she was able to knock off another $25,000 off the purchase price and another $30,000 off the down payment. And the best part of all of it, the seller has basically come back to her and basically said, I have another property that I'm ready to sell. He's an older gentleman. He's ready to retire. So he contacted her about another one, and it was catty corner to the one that she had just bought. And he wants to do seller financing again. And it's funny because I look back now and I'm pretty sure she just wanted to collapse in exhaustion by the time it finally got to closing. It's like the biggest relief, maybe like childbirth, right? You're in labor for, well, instead of maybe a day, you're in labor for a couple of months, and then you finally give birth to your apartment building. So I'm going to show you a little picture story of Battelle's journey post-closing. So that's her signing the closing documents and getting her keys. And it's cool because all the students in our mastermind were so excited to get to hear through all of her journey. They were hearing her being coached through all the difficult parts, what to do when XYZ would come up. The best part was when she got to the point where she was trying to decide on a name for the motel, she actually polled her fellow mastermind members. So Battelle's motel, which was literally her dream for 15 years, was named Coral Sands. And these are some of the pictures that were taken during the renovation process. And then that's Battelle and her husband. Ooh, there we go. That's Battelle and her husband in their pool before it got resurfaced. And the next 5 months were just about getting the property rehabbed. And in March 2021, she reported that it was completely done and it was 100% full as Airbnb. Like it was just so exciting. Like, wouldn't you love to be on the other side of your first apartment building purchase? Yeah, it's exciting and it takes work and it does not happen overnight. The point is, making an offer on an apartment building is so much less risky because you get to use a letter of intent to go back and forth. So there's no earnest money deposit until you actually get into contract, which means you've done all of this without risking any money up front. Okay, so let's take a minute to recap what you just learned. Okay, so number one, how to calculate the net operating income and cash flow on an apartment building. So make sure that your notes have at least the following. Revenue minus expenses equals net operating income. And net operating income minus debt service equals cash flow. Okay, and then number two, how to make offers on apartment buildings. You can use a simple letter of intent to gauge whether you and the seller are even in the same ballpark, and then you go negotiate from there. All right, so did you get those main points down? And do they make sense? Okay, hopefully you're saying yes, because I can't see you. Okay. All right, you guys ready to get into teaching point number 3? Take a deep breath. Clear your mind. Let's get ready to talk about how to raise private funds without complicated syndication. So have you ever heard of syndication as a way of raising funds for apartment deals? If you have, but you haven't done your first deal yet using syndication, why is that? In our experience, teaching and coaching investors into getting their first apartment building, if they were attempting to fund the deal using syndication, they'd almost never end up doing a first deal. Well, why is that? Well, syndication is a really big buzzword in apartment investing, and most apartment investing gurus out there lead as if that's the one answer. Because for most new apartment investors, the big mental block is about the money. Like, how am I going to raise the funds? So they throw syndication out there because it technically answers that question, and it makes it sound so easy to get the money. Okay, so what exactly is syndication for those of you who don't already know? Syndication is when you basically bring in passive investors, so they're not active or doing anything in the deal, but you're using their money in the deal. Well, that sounds pretty good. Well, what's wrong with that? Absolutely nothing. But syndication comes with a whole list of requirements and rules and regulations that are governed by the United States Securities and Exchange Commission. So that adds an element of complication that ends up stopping a lot of people dead in their tracks. Not to mention the additional expense of having to hire a syndication attorney and pay for a private placement memorandum. It is not mine and Jen's goal to just educate you. It is to get you across the finish line to closing and managing your first apartment deal. And since I know that introducing syndication when you're new is probably going to make the finish line never get crossed, we do not teach that as a way to get started. We do things differently. And it's not because syndication is wrong. Like, we've done it, we even teach it, but to our more experienced students in our Emperor program. Our purpose and goals are 100% aligned with helping you actually close deals. So when you're new to apartment investing, like, we can spat out the sexy syndication language just like everyone else, but we know that the chances of you actually doing your first deal with syndication are almost zero. So our mission is to help you get your first apartment building without syndication. So if not syndication, then what? It's called joint venture partnership. So remember when I told you about our polar opposites in the speed to action department, Cassandra and Lonnie? Well, on those deals, neither of them needed partners for that particular deal. But what about the next deal? Like, nobody's funds are unlimited. Like, you may be starting off with some limited funds, maybe not enough to buy an apartment building, or you may be starting out with a chunk of money and you can take down a small apartment building solo with what you have. So whichever category you fit into, learning how to raise private capital is 100% going to be something you are always marketing for, because at some point you're going to have a situation where you need more capital than you have. So let me show you what this looks like. So a lot of times the deal that you're working on, it might fall through. Say you're in due diligence, you find out the seller totally inflated the rents, and so you might end up backing out. That doesn't mean you can't be marketing for partners. So when Cassandra posted that she was just making an offer on an 8-unit, one of the responses she got was from someone who said, hey, I see that you have a deal under contract in Ohio. Let me know what you're looking for in a JV partner, right? And then when Lonnie posted that he was under contract on a 10-unit, 2 of the responses on that post were, hey, PM me on the details, PM me, private message me on the details of the JV joint venture, if you would. And another one said, I'd be interested in hearing your proposition and good luck with your due diligence, right? So just the fact that they were posting got people like looking and being like, oh, what are you doing? And maybe I'm interested. So our goal is with JV is to find one partner, maybe a couple if you need it. In a joint venture, your partner or partners are all going to have some documented active role. It doesn't have to be anything crazy, but they need some assignment, something they're responsible for so that they're not just a passive investor. So again, let me give you a real life example. So our student, Steve Caro. So he started with our passive income mastermind, focusing on 2 to 4 unit properties. Steve lives in Florida, got his first duplex under contract in Indiana within a month of joining our mastermind. Like, he's like Lonnie, fearless action taker. Anyway, shortly thereafter, he closed and he started getting immediate cash flow on that duplex. Then he closed on a single family, got it rented, more cash flow. Then a package of duplexes that added 10 units to his portfolio in one transaction. Then a few more. And within 7 months, he had 20 units. And he's like, I think it's time to get into apartments. And he had some funds, but he didn't have enough funds to take down a deal they ended up getting under contract. So Steve ended up finding an 18-unit apartment building that had been owned and operated by a lady for years. And the rents were way under market. And there was some additional storage space that wasn't being monetized. So in that particular case, there were so many opportunities to massively increase the net operating income on this building, which means there's so much money to be made by increasing the value. On top of it, the owner is actually willing to do seller financing with a 25% down payment. All right, so let's talk about some numbers on this. So the purchase price was $2 million, and Steve had to come up with $500,000. And he had some of it, but not all of it. He ended up bringing on a couple of partners who are also in the Warriors of Wealth Mastermind, who brought the rest of the funds. And just like with finding deals, the key to raising capital is building relationships. Well, Steve's a very active member of our mastermind. He always shows up to the calls. He always encourages other people. When someone new or has a question, like, he offers advice, he throws out answers. Like, he's really completely engaged. And other mastermind members who are in the program were on the journey to closing with him, listening to him being coached through it, through the analysis. And basically, as soon as he let everyone know that he was open to bringing on a couple of partners, multiple people were like, yes, tell me more, I'm interested. So Steve was able to end up closing on that 18-unit, and the rehabbing of that unit, of the units are basically happening 1 to 2 units at a time. They're able to raise the rents by $450 to $600 per month per unit. That's how under market they were. Like, isn't that nuts? Anyway, now Steve owns that apartment building along with other mastermind members like Lupe and Felicia and Debbie. And I think his Indianapolis realtor might be one of the investors as well. Like, you really never know where the relationships for money are going to come from. So in this case, the seller financed 75% of the purchase. Steve and his joint venture partners financed the rest. And everybody has a role that makes them active in the deal. One person does the agenda for meetings, another's on the rehab team, one reviews financials, one does meeting minutes. Like, do you see what I mean? I'm not talking about huge, massive roles, but something that makes it that they're not just handing money over and having no idea what's going on with the project. So let me show you what some of the numbers are on this deal. So the purchase price was $2 million, like I mentioned, down payment, $500,000. When he closed, the net operating income was $47,000 a year. Based on the actual market rents, once the property is fully turned over, meaning all the units are rehabbed and being rented out at market value, and this is something that will be done over like 12 to 18 months as people move out. Because when they bought the building, it was already 100% occupied. So they actually had cash flow coming in. Anyway, then as people moved out, they're rehabbing 1 to 2 units at a time using the existing cash flow and then getting market rents. So once it's turned over, the projected net operating income will be closer to $150,000 per year. based on the market cap rate in that market. And remember at the very beginning when I said, if you want to do a value add project, which is exactly what this is, you want to be in a lower cap rate market. So this is in Miami, market cap rate's around 5.5%. So based on that cap rate in that market, the building will be worth about 2.7 million when they get the NOI up to 150,000 per year. So if it was 2 million for purchase, by the end of year 2, the value is actually going to be higher. It's going to be closer to 3 million and probably more. But why is that? Well, 2 reasons. 1, Steve negotiated a piece of empty land next door to the building that can be sold for 400 grand, like just cut off and sold. And 2, if he chooses to, but 2, Steve's actually gotten very creative and figured out how to build another unit into some empty space and rented out storage space. So he effectively has 20 cash flowing units now instead of just 18. Like the increase in NOI is also going to increase the value by a lot. And even if he didn't do that, like just pause for a minute. How much of a gain would that have been? It's $1 million in 2 years. But that's not even all. Like once the units are renovated, all the partners in the deal are also getting cash flow. It's about $60,000 a year projected, like net. That's after paying everything. And the partners are getting 9 to 10% cash on cash return from cash flow. And then when they sell the building in year 3, they're going to end up splitting that $1 million gain. Just stop and think about that for a minute. Like close your eyes and imagine, like, what would it be like to be the one who brought that kind of prosperity to your family and your partners? It's a win at every turn. Now, it was stressful taking down that first deal, like especially when Steve didn't yet know who his partners were going to be or where the money was going to come from. And there were definitely some sleepless nights. But now it's done. And now Steve and his partners all get to say, I own an 18-unit apartment building. Imagine being able to say that. And now Steve has a lot of people interested in working with him. Like he just had to get through that first one. We just had to get him through that first one. And Steve, frankly, is someone who doesn't like to get too bored. So within a couple of months of closing that one, he ended up getting another building, a stabilized 10-unit building under contract. Well, his funds are now tied up in the 18 units. So now what? He just reached out to his fellow mastermind members and he presented the deal. He ended up taking down that stabilized 10-unit building with his fellow mastermind members, Barton Louie and Brian and Gigi Ochoa. And now they collect a monthly rent check of $13,000. And now all of them get to say, I own a 10-unit apartment building. And that gives them credibility, which actually helps them get more deals. So let's just agree to keep things simple and get you across the finish line of your first apartment deal without complicated syndication. So that you can say, hey, I own an apartment building, just like Temi, Joni, Battelle, Steve, Felicia, Debbie, Lupe, Amalia, Barton, Olga, Alex, Brian, and Gigi. Like they all can. Just close your eyes and say it in your mind. I own an apartment building. I own an apartment building. How does that feel? It feels amazing, right? It feels right. And like our students they're just regular people with regular lives, regular jobs, families, challenges, like regular human beings. And they did it by following our formula and using our proven system. And you can too. All right, so let's just do a quick recap. What's the solution to getting started in apartment investing if you don't have the funds and without syndication? That's right. It's building relationships to joint venture. Wow, we have covered a lot today. I'm excited for you. Like you are truly leveling up. So let's go back and do a quick recap of what we talked about all day today. Well, all day, this past hour, right? We taught you about selecting the right market so you can have confidence that you're in the right place. But remember when we talked about Temi? You can literally ask Temi anything about his market and he can rattle it off right off the top of his head. And that creates massive confidence. That's the power of finding the right market and focusing your efforts. We also talked about how to generate deal flow to start getting apartment deals sent to you and how to analyze deals so that you can feel confident in your numbers. And we covered 2 of the biggest pieces, right? Net operating income and cash flow. We taught you how to make risk-free offers using a letter of intent so you can make offers without being stressed out about your money being tied up. And we talked about how to raise funds for your deals without syndication so that you can more easily fund and close your deals. And now Steve has way more money available than he has deals. Like, how many of you can't wait to have Steve's problem of too much money and not enough deals? Of course, there's so much to learn, and you're always going to be making connections and having aha moments along the way. Like, that's the natural journey. I want you guys to close your eyes for a moment and just imagine like getting your first 6, 9, or 18 unit building. Imagine having cash flow coming into your bank account every single month. How much cash flow do you need to take your family on a killer vacation each year? Or how much cash flow do you need each month to not have to report to a boss if you don't want to? Like, I want to get you thinking about what life will be like when you start investing in apartments and you have residual income coming in. Like, what kind of monthly passive income would get you excited? If you had more money coming in than you need, like, what are some of the things that you'd want to use that money for? Think about it. Is it travel? If so, where? It's like, write it down in your notes. What is it that gets you excited? What is going to drive you to face your fears and get going and getting into action? Like, what else? What's that big carrot that gets you excited about building financial freedom? And what would your life look like if you could wake up every day with options? Like, what is your dream? I give you permission to stop playing small. Like, I give you permission to dream. If money was no object, what are the things that you would choose? And here's the deal. The harsh reality is you're not there yet. If you don't take action with everything that you learned in this masterclass, you will stay exactly where you are. That's just the harsh reality of life. We've all been there. Like, you're excited, you're ready to change your life, but shortly thereafter, like, life just happens and we just slide back into our normal daily routines. Those are comfortable, right? Yep, comfortable. But your daily routine has brought you to where you are now. They're not going to take you where you want to go. And here's what I want you to know. Like, we covered a lot of information today, but information without implementation, it does nothing for you. If you really want to create freedom and options for yourself, you're probably going to want help. And can you do it on your own? Sure. But do you really want to make 5- and 6-figure errors along the way trying to figure it out on your own? My guess is that you probably don't. My guess is that you'd be 1,000 times more likely to take action if you knew you had an experienced mentor by your side. And Jen and I, we want this for you. I promised I would take a few minutes to share, like, for those of you who are committed to creating financial freedom for yourself, how you can get some additional support so that you can accelerate your results and start closing on apartment buildings and bringing in passive cash flow. So my invitation for you is this. I know that there's some of you that are ready to start and you don't want to take the painful path and figure it out as you go, right? Potentially losing thousands of dollars on common newbie errors. You prefer to plug into a proven system that our students have been using to close on 5 to 50 unit apartment buildings without complicated syndication. And you want to be part of a network of other investors who are on the exact same journey as you. And I don't blame you. I wish something like this was available when I was a new investor. Like, Jen and I, we don't take a one-size-fits-all approach. Our program is customized to you based on your needs and your goals. Like, the course is truly an A to Z, step-by-step process to get you started in apartment investing, like, all the way through closing and managing your properties. Remember when we talked about Temmie nailing down his markets? Well, all the details on doing that are in the course in the market research and choosing a market section. I mean, there's 13 different instructional videos just in that one section alone. And this is the section of the course that allows Temmie to now be dubbed King of Hartford and Joni, the Queen of New Orleans. You know, from creating deal flow to underwriting and financial analysis, every single detail is included so that you're operating from a place of knowledge and confidence. You know how we were talking about Joni and her 2 apartment buildings in New Orleans? She never would have had the confidence to make offers if we didn't teach her all the ins and outs of doing financial analysis or underwriting for apartment deals. And she used the proprietary calculators that we built for you so that she would know exactly how much to offer based on how much cash flow she wanted to create. And I could tell you that our Apartment Accelerator program has over 170 instructional videos that you can access 24/7 and have lifetime access to. Blah, blah, blah. Who cares? What does that even mean? The Warriors of Wealth program really combines a number of different things, which is why our students have so much success. Education, group coaching, one-on-one coaching, and community. All right. Education. So all the education is hosted online and it's consumed at your own pace. So we teach you through those 170 plus videos in A to Z detail, everything you need to know to successfully do this business. We have a chief experience officer to check in with you every 2 weeks during your first 90 days, like the most important time to help you stay on track and get through the course and into serious action. Then our student success officer takes over to check in with you and make sure that you're on track and will help redirect your efforts when you're off track. And we have group coaching. All right, with group coaching, we have an apartment-focused group coaching call every week where everyone in the apartment mastermind comes. And if you're in a deal, we're going to go through that deal and make sure that there's nothing you're missing. We're going to advise you on strategy, on things like negotiations and funding, deal structuring, seller financing, dealing with all the different things that come up during due diligence. We basically cover everything that we see that you need to know to make sure you do this successfully. And one of the coolest things about the group coaching is that when you're newer, like you might not have a deal yet because you're just started, but you're getting to hear people who are just a few months further along than you, getting coached on their deals, which means you get to hear all of the real issues and challenges they're facing and hearing them get coached and advised through it. So like some people have even told us in our mastermind that when they start hearing some of their peers getting coached, it gets them all fired up and excited and it makes them go even faster. It's awesome. All right. And then we have number 3, which is one-on-one coaching. Look, when you are eyeballs deep in a deal and you need help or have questions, you need a second set of eyes or you need advice, you have your one-on-one coach that helps you along the way. All right. And then number 4 is community. So we have this amazing messenger string for members of our mastermind for asking questions and networking. I can't even tell you how many partnerships have been formed and deals have been funded just from the relationships built there. Like between the messenger string and the group calls, the incredibly supportive family environment just rocks our students' worlds in the most incredible way, and it gets deals done. So look, if you're sitting here and feeling any inclination or feeling a pull and like you just want to explore this, we're going to invite you to hop on a call. We're going to talk to you about your situation. We're going to talk about whether this is a fit for you. All right. And this is just a clarity call. Even if you don't take the next step, you're going to leave the call with more clarity and a new direction. All right. But we're not selling you anything on this initial call. You can get on our calendar to chat by texting the word mastermind to the Warrior Hotline. This program is not a fit for everyone, but it is a fit for you if you're ready to stop sitting around watching everyone else take action and get results. And you want to build long-term wealth and passive cash flow, like with apartments. And you have more desire to succeed than excuses why you can't. And you're coachable. And frankly, this program is not a fit for you if you aren't even sure which direction is best for you. Like if you're tossing around different ideas, like, ooh, should I do stocks, crypto, real estate? I'm not really sure yet. And you're still trying to decide. This is not the time. Like it's not the time for you to book a call. Okay. Or if you feel like, I just feel like I already know everything, there's really nothing that we can do for someone who already believes that they have all the answers and they're not coachable. Or if you, and I know this is going to sound terrible, so sorry. But frankly, if you're lazy and unwilling to make some sacrifices to carve out time to grow your new business, to take care of your future and your family, then this is not going to be the right fit for you. Look, when you become a member of the Warriors of Wealth Mastermind, you get the best education, the best coaching, and the most incredible network that exists. And we give you all of this so that you can confidently step into a new business that can literally change your life forever. And have us hold your hand so that you can get the help that you need to close on your first apartment building. Do you wish you would have started this like 20 years ago? Well, yeah, of course, you and everyone else. But today is the day that you're faced with that decision. Is it time to change your life? I want to ask you to consider something. What is it costing you to keep sitting in a place of paralysis and indecision? If you're over it already and ready to get some clarity, take action and let us help you get your first deal, or at least explore what that might look like for you. Text the word mastermind to the Warrior Hotline at 619-373-8461. And if you hop on a call with one of our team members, we can help get you some answers. Also, I want to let you know that every week in our multifamily real estate investing Facebook group, Jen and I do a live Q&A. We call it the weekly Ask Us Anything. And it's every Wednesday at 3 p.m. Pacific, 6 p.m. Eastern. And we would love to have you as a member of our Facebook group and have you participate in the Ask Us Anything anytime you have questions. We are excited for those of you who have made the decision to change your life and hop on a call with our team to talk about what this is going to look like for you. Between your ability to consume all the education at your pace as often as you want to and whenever you want for life, getting coached live every week by us, and having a continuous lifeline to your coach and the fellow mastermind members, like you will have everything that you need to be successful. Do you know that we have so many students who came to us having taken other programs and never got a single result? It's so common. And then they come to us and they start getting results. Why? Why is that? It's because when we started Warriors of Wealth, Jen and I were committed to our students getting results, not more education. And that's why we've structured a program to help you get across that finish line. If you could just get through your first couple of apartment deals, but with us holding your hand and while learning our system, do you think you could do it again? And don't worry, we'll still be there to help you. You may choose to keep going bigger and bigger. Many of our students do. And we will be there with you for as long as you want to have us with you. And we're just excited for your future. Your time is now. Text the word mastermind to the Warrior Hotline at 619-373-8461 to schedule your clarity call with us today. And I'll leave you with this. It's a quote from my mentor, the one who back in 2003 planted the seed that got this whole thing going. In your moments of decision, your destiny is shaped. Thank you guys. I hope to see you on the weekly Ask Us Anything, and we look forward to seeing you in the mastermind.